This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, July 27, 2026, and this is the After Hours session. Now, let's get into it. Bitcoin is clinging to the $63,799 support level, holding firm despite a 2.36% daily drop and a collapse in futures demand to 2024 lows. The Fear and Greed Index has plunged to 14, the lowest reading in the current cycle, signaling that market participants are pricing in maximum pain. But beneath the surface of this extreme fear, a strange divergence is unfolding. While spot prices bleed, structural liquidity events worth billions are quietly activating in the background. Welcome back to ShadowQuant Crypto Edition. Before we dissect the charts, let's look at the macro landscape shaping today's risk appetite. We are tracking 3 critical economic releases over the next 48 hours. First, today, July 27th, brings the Durable Goods Orders Report and the Dallas Fed Manufacturing Survey. These indicators will help us gauge whether the broader economy is cooling enough to support a dovish pivot later in the week. Tomorrow, July 28th, we see Case-Shiller home prices released, offering a snapshot of real estate stability, a key component of wealth effects. And finally, the marquee event. July 29th features the FOMC rate decision, with GDP data arriving on July 30th. For crypto, these are not just background noise. They dictate the cost of liquidity that fuels our current deleveraging event.
What to watch for specifically with the FOMC decision on the 29th is not just the rate itself, but the language surrounding inflation persistence. If the data from today's durable goods and tomorrow's housing prints suggests stickiness, the market may interpret any hold as hawkish, keeping the VIX elevated and pressuring crypto's risk-on narrative further.
Here is the snapshot as of 19:04 ET on July 27, 2026. Bitcoin sits at $63,799, down 2.36%. Ethereum follows at $1,893.45, down 2.84%. The total market cap is $2.27 trillion, contracting by 1.71% in the last 24 hours. Trading volume stands at $66.36 billion. But the story isn't just in the aggregate, it's in the fragmentation. Bitcoin dominance is rising to 56.45%, while Ethereum dominance falls to 10.9%. The everything else trade is unwinding. We have 13 out of the top 15 assets in the red. Let's break down why this sell-off feels different than usual. 3 headlines are driving the conversation right now. First, Cointelegraph reports that Iranian crypto outflows have spiked 700% following US-Israeli airstrikes. Second, CoinDesk notes that PayPay, the 40% owner of Binance Japan, is seeking up to $1.10 billion in a Nasdaq IPO. And third, Cointelegraph highlights that TD Securities views NYSE tokenization as an institutional turning point. How do these intersect? That 700% spike in Iranian outflows is injecting raw, non-fundamental fear into the system. It's not selling because valuations are wrong. It's selling because of geopolitical panic. That's why the fear index is stuck at 14. It's reacting to war premiums, not just market fundamentals.
But don't confuse that noise with the PayPay IPO move. A $1.10 billion public listing for Binance Japan affiliate is a massive structural inflow signal. It suggests institutional capital is looking for regulated onshore rails, which directly benefits the XRP ecosystem given its cross-border utility. The flow direction is clear, from shadowy geopolitical flows into structured, compliant, equity-like instruments.
And yet, we're seeing core scientific turn lower after disappointing Q4 results. The market is punishing the leverage-heavy miners. When you combine that with the 700% Iranian outflow spike, You create a liquidity trap where spot buyers are hesitant to step in because they don't know if the volume surge is genuine accumulation or panic exits. The VIX at 18.58 looks calm, but crypto is screaming.
Let's start with the anchor. Bitcoin is at $63,799, down 2.36% from the open, with a 24-hour high of $65,546 and a low of $63,800. It's barely holding the line. Grid, technically, how does this level look given the volume profile?
It's a fragile holding pattern. At $63,799, we are seeing a leverage flush dynamic. The 24-hour range is tight, but the absence of futures leverage means there's no speculative cushion catching the bids. We're seeing a classic distribution pattern where spot buyers are absorbing sells, but the depth isn't there yet. The 56.45% dominance tells me that capital is fleeing alts for safety. Concentrating liquidity here, but it's thin liquidity.
I'd agree it's thin. The data shows Bitcoin futures demand has fallen to 2024 lows. There is no leveraged buyer left. What we are seeing at $63,799 is purely spot-driven absorption. Meanwhile, the Monad Network's CB-BTC bridge is activating, potentially adding $5 billion in Bitcoin-backed liquidity. My flow models suggest that while futures are emptying, spot inventory is being accumulated by entities using that new bridge. So, the price isn't crashing because the leak in the bucket is being plugged elsewhere.
I'm skeptical that the CB-BTC bridge is enough to offset the margin calls happening right now. Look at the broader risk-off environment. .com-era tech stocks are volatile, and with core scientific dropping, the mining sector, which often acts as a proxy for hash rate health, is shaky. If Bitcoin breaks $63,800, which it touched earlier, the next stop isn't support. It's a retest of lower structures because there are no short covering rallies coming from futures. The 2024 low in futures demand is a warning shot. When spot finally cracks, there's no spring.
The sentiment is reinforcing that caution. Retail is exhausted. The 7-day trend in fear and greed rose from 12 to 14, meaning fear is compounding, not fading. Most traders are sitting on their hands waiting for the VIX to confirm a move, but in crypto, we don't need the VIX to break 20.31 to feel pain. We're already in single-digit fear territory. This isn't a dip buying opportunity yet. It's a wait for clarity zone. So, we have spot absorption via Monad clashing with a complete lack of futures leverage. Apex, how do you reconcile the pay IPO narrative with this technical stagnation?
You're looking at two different timelines colliding. Grid and CIPHER are describing the microstructure, spot vs. futures, which is currently stagnant, but Apex sees a macro liquidity reset. The pay IPO brings $1.10 billion of institutional scrutiny to the space, and the Monad bridge brings $5 billion of on-ramp capacity. This isn't about today's $63,799 price action. It's about the structural floor being raised for Q3 and beyond. However, until the VIX breaches 20.31 or futures demand returns from those 2024 lows, the path of least resistance remains sideways to down for the short term. We are digesting the fear before we can build on the infrastructure.
Moving to the altcoin complex. Solana is at $74.17, down 3.22%, with a 24-hour range of $74.37 to $77.23. It's underperforming Bitcoin. Grid, what's the structure here?
Solana is acting as the high beta barometer. At $74.17, it's testing critical support. The 24-hour candle is bearish, closing near the low. More importantly, look at the spread. BNB is down only 1.56% at $565.99, while Solana is down 3.22%. This divergence indicates that capital is rotating out of high-speed L1s first. The technical setup is ugly, lower highs on the hourly chart. Unless we see a volume spike above $77.23, the path of least resistance is lower.
The flows confirm the rotation. We're seeing exchange inflows increase for Solana and Cardano, which usually precedes selling pressure. But interestingly, the XRP flows are mixed because of that pay IPO news. While Solana bleeds, XRP is holding $1.07 with a slight 3.95% decline. The market is pricing in the regulatory clarity around XRP differently than the tech narrative around Solana. The $66.36 billion total volume is heavy, but it's not going into Solana. It's going into Bitcoin and defensive layers.
And let's not ignore the casualties. Polkadot is down 8.6% at $0.75, and Cardano is down 6.47% at $0.15. SPECTER here. This isn't just normal rotation. This is capitulation. When you see a coin like Polkadot drop nearly 9% while Bitcoin is only down 2%, it signals that algorithmic trading bots are triggering cascades. The smart money isn't buying Polkadot. They're watching it burn. The TD Securities note on NYSE tokenization is great for long-term trust, but it doesn't stop the liquidations happening right now on these mid-caps.
The sentiment on Polkadot and Cardano is completely washed out. You won't find any hope in the community metrics right now. It's pure disgust. The 14/100 fear index is dragging these assets down. Until the sentiment flips from fear to neutral, any bounce in Solana or Cardano will be sold into. The 700% Iranian outflow spike adds a layer of unpredictability if geopolitical tensions escalate. High beta assets like Solana get dumped fastest because they are the easiest to exit quickly.
To tie this together, Grid identifies the technical breakdown in Solana, CIPHER confirms the flow rotation into safer assets like Bitcoin and XRP, and SPECTER warns that the magnitude of the Polkadot/Cardano drop suggests automated liquidations rather than fundamental reassessment. The thesis is simple. In an extreme fear regime with falling futures demand, beta alts pay the tax. The strategy isn't to catch the falling knife on Solana, it's to monitor the stabilization of Bitcoin dominance at 56.45%. Once that plateaus, liquidity might trickle back down, but until then the upper hand is with cash and Bitcoin.
Let's zoom in on XRP. It's trading at $1.07, down 3.95%, with a 24-hour high of $1.11. The headline is pays $1.10 billion Nasdaq IPO. CIPHER, how is the market processing this specific catalyst?
The market is trying to price in a massive institutional endorsement. PayPay owning 40% of Binance Japan and going public on Nasdaq is a regulatory green light for Asian capital entering crypto. Right now, XRP is down 3.95%, which seems like a sell the news reaction, but my flow data shows large wallet movements aren't panic selling, they are repositioning. The $1.10 billion IPO size suggests deep pockets. If this IPO proceeds smoothly, it validates the bridge currency narrative for XRP. However, the immediate price action is suppressed by the broader market fear we discussed.
Technically, $1.07 is a key psychological level. The 24-hour low was $1.06, so it's hovering right there. If it loses $1.06, we see a wick-down scenario. But notice the volume, it's not exploding. It's muted. This suggests the big players are waiting for the IPO filing details before committing. Support is thin until you get down to the $0.95 $1 range. But I wouldn't want to test that in this fear environment.
Be careful calling this a green light. Regulatory clarity is good, but remember the CBDC ban in the Senate housing bill. That creates uncertainty. Institutions love clear rules, but they hate contradictory ones. You have a CBDC ban pushing privacy coins, and a Nasdaq IPO pushing compliance coins. XRP sits in the middle. The risk is that if the broader macro environment worsens, say, if the durable goods data comes in hot and kills rate cut hopes, that $1.10 billion IPO won't save XRP from the general market tide. It's a tailwind, not a shield.
Retail sentiment on XRP is historically sensitive to news cycles. They see IPO and think moon. But the current 14/100 fear index overrides retail enthusiasm. People aren't buying dips today, they are covering shorts. So, while the long-term thesis for XRP strengthens with PayPay, the short-term price action is being held hostage by the macro fear index.
Let's wrap this up with a unified view. We have a market characterized by extreme fear, 14/100, and a liquidity disconnect. Grid has shown us that Bitcoin at $63,799 is technically vulnerable without futures leverage. CIPHER has proven that while spot flows are shifting towards structural nodes like Monad and PayPay, the overall volume is still dominated by defensive rotation into Bitcoin. SPECTER correctly identified that the sharp drops in Polkadot and Cardano are driven by automated liquidations and macro caution, not just bad sentiment.
So, the takeaway from this after-hours session: we are in a battle between structural growth stories, like the PayPay IPO and Monad Bridge, and immediate macro fear, measured by a 14/100 fear index. Bitcoin is holding $63,799, but without futures leverage, it's fragile. Altcoins are bleeding as capital flees to safety. Keep an eye on the durable goods data and the EFF-OMC decision next week. Those will set the tone for whether this fear becomes a foundation or a fracture. Thanks for listening to ShadowQuant Crypto Edition. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.